Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, October 20th, with our friend Shaun Burgess, Portfolio Manager on our bond desk. Primarily Muni related. In terms of this week, you've heard me say this before, especially last year. The sickle was swinging this week, both on equities and fixed income.
Very true.
Let's just take a quick peek at equities this week. 2 or 3 hiding spots. Could hide a little bit in precious metals, could hide a little bit in energy, and could hide a little bit in staples. It's funny, last Friday on our week in review, we talked about the extreme negative momentum in staples and how we hadn't seen that level really in close to 10 years. And what happened? We did get that bounce. Unfortunately, we're underweight staples, as I mentioned last week. We're able to hide in some precious metals in US ETF, as well as energy and cash. You know, weeks like this, you never feel like you have enough cash.
Exactly.
If the market's up, you have too much cash. Yep. Just as a quick rundown for clients, in our US core strategy, we're holding somewhere about 8-10% cash. That's a core strategy spread out over indices. Small, mid, large, some growth, some value. In our US ETF, we're up over 25% cash, so we do have dry powder there. This week, what worked in that strategy? Precious metals worked, some energy worked. What didn't work? Solar got smacked. That has been a sector that can't get out of its own way. We'll start to look at balance sheets now. Which ones in there can become
give you a little protection, right?
Tradable stocks going forward. So we'll keep an eye there. In tactical, about 25% cash. And when I say cash, that's represented in Treasuries, oftentimes BIL in your statement, other times in money market, 5% or better. Again, wish we had more cash this week.
You always do when you're in a market like this.
But that's a solid allocation, and we'll look for opportunity. International, we let go of a little Taiwan this week. Taiwan's been a decent holding, but it had grown to 10% of the international portfolio. We knocked that down to 5%. That took cash in international, Shaun, up to about 15%. Gives us a little bit of powder, and we'll take it week by week here.
In a market like this, you have to.
Tell us about bonds, because you were on roller skates all week too.
I'll tell you, it was ugly for equities, ugly for bonds. Treasuries really felt pressure. Fear of Fed came back into the conversation. You know, we look at last week, you had a shooting war in the Middle East. That dominated, so you had some downward pressure on yields. This week, fear of Fed back in the driver's seat. You know, markets are really looking at what the Fed is going to do, where we could be a year from now, if the Fed's going to hike in November, right? These are all things that are dominating. And we talked about it this afternoon. You have supply of treasuries. The auctions were fairly weak. That too is putting upward pressure on yields. And treasuries move higher on yields, munis move higher on yields. Now munis did better. You know, not much better, but they did better than treasuries. We outperformed. So that was nice to see. You know, we barbell portfolios.
Right.
We like that short end. You get a lot more yield now than you did last week.
Right.
We like the long end. We talk about it every week when you can buy a 5.25, 5.30, high quality tax-free muni. I mean, when you juxtapose those two, you get some short end, you get some long end, you end up with a great portfolio that has a very nice yield now. So we're not going all out. We're not adding to duration a ton, but we want to be picking our spots on that short end to fill and the long end where you can buy that 5% tax-free. Great value there.
Sure, when you put the taxable equivalent on top of that tax-free.
For a New York resident, it's tremendous.
North of 8% in an awful lot of cases.
Oh yeah.
So in terms of what I'll be watching next week, and I've been fairly consistent with this, that 4150, 4200 in the S&P has been an area that demand does show up. Buyers have been showing up. Let's see how it's treated next week. All we're trying to do is learn where the levels are, where the buyers are. We'll keep our eye there. We'll also look for what trades dry. You've heard me say that before. What do I mean by what trades dry? When markets are getting hit, What's staying green? As simple as that. What are sectors, industries, indices, stocks that holders almost have to have pride out of their hands? Those are the areas we're interested in volatile markets. And Shaun, in terms of what you're looking at, if we can continue to barbell, and keep in mind on the short end, we're getting paid now.
We're getting paid for the first time in a very long time. We've now been getting paid really well.
On the long end, we are able to take advantage of some forced selling when it pops up from time to time in the market.
Oh yeah, we want to be opportunistic in here, and you really want to, as you said, pick your spots, look for good value. Volatility can drive some really good opportunities, and that's what we're looking to add to portfolios.
Good. Okay, well, we enjoyed spending some time with you. We'll see you next Friday. Enjoy the weekend.